Do you sometimes get a case of vertigo from looking at a chart, cannot tell up from down, down from up, and just get weary of people drawing trend lines, moving averages, MACDs, stochastics, redrawing them, looking at daily charts, weekly charts, monthly charts? How do you tell up from down, down from up? I am Bagadon at StockMarketCaddy.com, and if you indulge me these next couple of minutes, I'm going to give you a very fresh analysis of the S&P 500 as of September 3rd at 1 p.m., Labor Day weekend. And we're going to do this without the confusion of a chart. This tool is called Radar Screen. It is a proprietary tool from TradeStation. This tool, operating on the radar screen, is our proprietary tool called SMC for Stock Market Caddy, the Swing Machine Plus. I've loaded in the VIX on a daily, on a weekly, and on a monthly basis. What is the VIX? The VIX is a view of the options market. When folks are buying calls, they are generally bullish the market, generally. When they are buying puts, they are generally bearish the market, namely the S&P. We're talking the VIX for the S&P. So a downtrending VIX on a futures contract, which is a bet into the future. You see, we like to use futures over ETFs because it is leveraged and we think it is quicker, smarter by a couple of days, sometimes a couple of weeks over traditional markets. So when the VIX is trending down, generally you will see the S&P trending up. Let's just take a look. Let's start out further at a monthly and then drill down to a weekly and then ultimately a daily. The assessment or the technique is the same. The VIX on a monthly basis went short 38 months ago. 38 months ago at 5 p.m. in August of 2020. The S&P futures contract on a monthly basis actually went long 154 months ago at this price, 1162.50 at 5 p.m. in December 31 of 2010. Isn't that amazing? And yes, one futures contract short the VX, you'd be up 72 grand in 38 months, or one futures contract back here on 2010, one futures contract, 167 grand. Isn't that crazy? It's still long. The trend on the VIX on a monthly is down. The trend on the S&P is solidly up. When we look at the fair gauge, though, we can see that the VIX is pushing down into panic sell. And remember what we said about the VIX. Many times it's a contrarian's indicator. And where do we see the S&P? At 70, pushing up toward euphoria. May or may not get there, but it could certainly go higher. When we have the VIX in panic and the market in euphoria, that is not a time to be initiating a new buy. It is a time to be protecting the profits you have. Hopefully you have the skill set to do that. It can be done any number of ways: selling covered calls, selling half or a portion of your profits, buying some option contracts, or selling some option contracts to hedge yourself. Now, let me also show you this. Once again, all on Swing Machine. We'll bring this into view. Here's the ES on a monthly. I've just slid this over. On a monthly basis, the fairway radar is telling us we're dead in the middle at just under or between 44.95 and 46.41.83. As prices move up into this area, if they do, they will hit resistance. The monthly resistance, major resistance, is between 46.41 and 47.67. We are not obligated to get there, and if we do get up into that, the likelihood that we come pulling back is quite high. Now that is for the monthly view. Maybe you're not a monthly investor. Maybe you want to have better resolution and you want to look at the weekly. The weekly VIX also went short 156 weeks ago, back in September 11th of 2020, trending down. And yes, you'd be up some 71 grand. It's not nearly as panic sell as the monthly, but it is underneath its mean. The ES contract went long 21 weeks ago. So we have had some oscillations on the VIX, which would contribute to dips here. But the ES has been long for 21 weeks. And yes, if you had put on one futures contract, you'd be up over 15 grand at 42.07 on this date. The trend is certainly up, and it's just in the mean. Could it go higher? It most certainly could. But we do find it rather interesting that the VIX is at 30 on the weekly, and if the market was truly in balance, it would be at 70. So maybe the market isn't as bullish as people might think on a weekly basis. And on a weekly basis, we can see that we are pushing up into resistance between 44.78 and 45.41, which we're getting very close to, is major resistance on a weekly basis, whereby we could expect a significant pullback. On a daily view, the VIX went short 110 days ago, back in March of this year. Yes, could have made some money there. And notice where it is. It is in panic, nearly panic sell. The market short term is very, very complacent. The ES on a daily, it did go long 3 days ago. And yes, you would be down a little bit. The trend is certainly up. But look where we are. We're at 80 on the fair gauge. And we could go higher. We most certainly could. But if we push up into euphoria, and if the VIX pushes down into panic, for us and for our members, that is not the time to initiate a buy signal. It is time to do just the opposite. If we have positions that are on a daily basis, the daily swing trader, what do we want to do? We want to sell covered calls. We want to start taking some profits. We want to start getting defensive. We want to start constructing option contracts out over the next 20 to 30 days. Why? The likelihood that the VIX starts to move back toward its mean and the market move back toward its mean is some 95% on a daily basis. We're not obligated to stop at the mean. If people begin to panic, especially at this time of year, September and October, the markets could come in considerably. If you leave your money exposed, You're going to have less of it when it's over, and then all trades do come to an end. And if you do not know how to structure trades, you won't be able to profit when the market comes down. And I also want to show you, let's bring this in. I'm sorry that the screen is juggling there a little bit. We can see on the VIX on a weekly, very, very complacent here. The daily ES is right in the middle. It should be higher. But if it pushes up any higher, 44.33, 45.33, 45.51, what will we be doing? We will be selling. We will be constructing option trades for the pullback. I am Bagadon at StockMarketCaddy.com. If you are tired of all the other stuff that's out there, all the noise, trend lines, moving averages, stochastics, MACDs, and all that other nonsense, and you want to get much more precise and get away from even needing a chart, and we do use charts, but not in the same way that you see day in and day out, and you want your trading to be more mechanical, ideally more robotic, and you want to begin to think about hedging and running, in essence, your own hedge fund, not the solicitation of monies to run for other people. We don't do that. We don't make recommendations to buy or sell. We don't solicit funds to manage. We are a mentoring site whereby we teach regular folks, just like us, how to trade the markets mechanically and robotically. We've been doing this for years, not 6 years, a long time. Feel free to visit our site. Feel free to email us your questions, and feel free to call 9 a.m. to 9 p.m. anytime, including weekends, at 813-758-8263. Any further rally in this market, in our view, on a daily basis, is an opportunity not to buy, but an opportunity to sell. Good luck.